It's the weekly 30/30 trading list. We're finding the best momentum companies on the ASX and identifying those companies that are set to run. Gary Glover from Novus Capital has been through the list, pulled out his favourites, and is here to talk them through. Good morning, Gary. How are you?
Yeah, I'm great, Chris. I'm great. Went through your yes, quite a few good stocks actually. Probably more in the quarterly. Quite funny. Your first 5 or 6 lists on the weekly were all on my list from the weekend. So I had them all written down as stocks to watch this week. So I must be doing something right. So
You got yourself a good process there.
Maybe. So it made me laugh actually, just seeing the first 5 or 6 there. I thought, geez, they're all, these are stocks I had on my list. There was only one stock that I saw which wasn't on there, and that stock actually hasn't performed too well. So how's that? So but let's get on to the quarterly here. So number one on the quarterly was Invictus, IVZ. So as he had a big move, almost 300%. I think A11 was number 2. That's probably more interesting than Invictus. Invictus really didn't give me much chance. It just went straight up. But the Antic Lithium there has popped up here. Some pretty good volume. I think we mentioned this one actually probably 2 or 3 weeks ago, because we sort of said this is one that could keep an eye on there because it's obviously a new IPO. When they consolidate like this and then do pop out above the range, there can be a little trade in there. That would have been quite nice. So when you're talking about maybe getting along at, say, 66 here or something, it's gone to $1. So that's a pretty nice move in there. But we can see the whole thing's tightening up here again. So we've got a little triangle or a little consolidation, sort of tightening sort of pattern here. Volume's definitely starting to wane here. So might need a little bit more time. But this has still got, still potentially could, if it use up, if it tightens up in here again and then gets a little positive stimulus there, could be another trade in there potentially. So definitely one to sort of keep an eye on. Number 3 was sort of WGO, so quite a few energy stocks in the list. AGY was number 5. I thought was pretty interesting. This is one that we spoke about a couple of weeks ago as well, and we're sort of talking about this sort of being a cup and handle, probably a little heavy on the handle here, but as Dava said, once you sort of break out of here, obviously you didn't get a close above there, probably just sort of closed on that mark there. There was some reasonable volume in this little move up here, so that was sort of telling you there's sort of something brewing. Would have been hard to sort of buy. We've been buying on the gap up, but again, still a little BCP pattern here in a way, little tightening there under the low, then pop through. So. But that's popped through on pretty good volume. So that does look pretty good. It's a little late to be coming in now. A4N was number 6. Again, had a bit of a move. The volume's a little light, so nothing too exciting in there. Cetire's pretty interesting there. It's a sort of one that everyone was a bit dubious of there, but I noticed they reported pretty well. It's just had a bit of a run here now. Definitely showed a bit of relative strength, like 360. But it is sort of consolidating, a bit sort of cooling off here now. So possibly a bit late here. I'd be wanting to sort of see a consolidation or a bit of a cooling off there. See what happens there. Weebit Nano, some pretty good volume there, Chris. This has had some good volume all the way through here. That's pretty interesting. So probably want to sort of see maybe a little consolidation, a bit of a cool off there. But if we can use up a bit of time here, a bit of a consolidation there, that's one to keep an eye on there. In the list there, still got a few takeover stocks there, like obviously Origin. I think Elmo was in there. There's just a few that were Nitro, a few on the takeover there, which were sort of not really trading opportunities. A few gold stocks on the list as well. So we got Perseus, got Gold Road, pretty strong. I think Northern Stars in there. Regis Resources as well, RLL. So there's quite a few gold stocks actually now. We had those triggers there a couple of weeks back. So we had, I think 2 or 3 weeks ago, we had, 4 or 5 gold stocks in the launch pad. And last week we had quite a few more as well in the launch pad. And now some of these stocks are actually now in our quarterly momentum. They've actually popped up so strongly But yeah, I do think gold's pretty interesting here. So the one thing we've seen here is really big volume on some of these moves. See there, like Evolution, like some of some really, really strong volume out of those lows. So you're just sort of looking for, now we're looking for some sort of consolidations, a little bit of a pullback, sort of tightening price action. Use up, whether we get a little ABC or we get a little pennant or flag or something like that. And then we're looking for those sort of consolidation on low volume. So, so really interesting sector. Interesting now that those sort of stocks are starting to sort of hit through into, I guess, amongst our quarterly momentum leaders as well. So ADT, number 11, pretty strong move in there. I mean, we had a little sort of cup and handle in here, a little tightening there, little VCP, and then pop through there. That would have been a nice little trigger day here. Obviously, we've just cleared the previous high in there, and some okay volume in there, but the volume sort of came later on. But yeah, that's sort of, in terms of our Darvis, trading to new highs, a little cup and handle is a good little trigger in there. So still got to be seeing a bit of a mixed bag in that lithium space there. So some of them are sort of getting really cooling off. Some of the new ones are sort of still popping here. So just sort of got to go, just got to sort of watch for these consolidations here. Capricorn Metals there, it's had a pretty strong move here. Just consolidating here at the moment, maybe a bit more time here. That's sort of somewhat constructive. AIS was the one that I thought, okay, let's just have to watch this one here. Did go above this high, so a bit of above a swing high there. Not incredible volume in here, but this is probably the most, most impulsive rally we've seen for a while. And we're sort of drying up in the consolidation here. So this is definitely one to watch here. Just want to see it consolidate a bit longer there. But that is sort of constructive so far. AMA Group. It's actually one of the viewers. I think we highlighted this actually last week. There was a little sort of cup and handle in there. Actually, one of the viewers sent me a research piece on it as to explaining in quite some detail as to why there's some value there. So interesting article there. But yeah, this is sort of smaller stock here, but yeah, somewhat encouraging so far. If the whole thing can sort of hold here and sit on top here. So we've had some good volume through here, and now the last couple of days pretty light volume. So still pretty constructive for a sort of small stock. Bit sort of small and bit not liquid enough for it to take a big position there, but definitely one that sort of is looking quite good. SFR, Sandfire Resources, look at that volume there, Chris. That's big volume for out of this here as well. So this is like a lot of the gold stocks here. We saw a good exhaustive volume at the low, good volume sort of starting to accumulate here.
Then dries up.
Pull back on the pullback, and then pop the volume again. Pulls back on the pullback, and then big volume again. And now we're starting to see a bit of a cool off here. So what we want to see here is we want to sort of see these sort of, these are some good signs here for some of these gold stocks, seeing some really, really healthy, very strong volume on this rise here. So we want to see a little bit of a pause here, a bit of a consolidation, a bit of a flag or pennant, something like this, or, it's sort of, you want to sort of see something a bit more, constructive like this. I don't know, some sort of consolidation there, tightening up, nice little tight consolidation there before we go there. But these are good signs there. They just might need to have a bit of a pause here. But yeah, some pretty good signs there already. Big moves usually follow those big volumes. So, and we know in the past there that gold can have sort of big moves here. So just had a bit of a pop here, just might need a bit of a consolidation. RNU is a small one now. I think we sort of spoke about this one here, maybe a little cup and handle in here, and then started to break out here. Some pretty good volume coming in here on these moves here on the breakout as well. So holding quite nice there. Some decent volume down in the low, just some constructive volume on the ups here. Dried up in here, got going again, dried up again, got going again. So for a small stock, that looks pretty encouraging. NST we mentioned was again pretty strong here. So we're just looking, obviously having a bit of a pause at the moment. Be nice to sort of see that drop a bit more. ARU, big volume here out of this last low here. So that's sort of interesting. Oh, excuse me. It's sort of probably popped up in the range a bit now. So definitely wouldn't be chasing this here, but definitely one to sort of keep an eye on that sort of volume there. So that's kind of our quarterly momentum. There's just quite some interesting stocks in there. Obviously some smaller ones there, but there has been some good little opportunities in there. On the weekly list, so Zip was number one. So I did actually notice this. I think this must have been last Friday here. It was the 11th. Just consolidation, a little bit of a pop there, which I think at the time the volume was a lot heavier. So that was like, oh, that's an interesting little signal. So I think it sort of consolidated a couple of days, popped up here. But yeah, so still pretty risky here. I just sort of thought, still a risky sector here, but did see some encouraging signs, some encouraging volume through there. So
we did see, it might not have been when we ran the 30/30 list and went public on that, but in the launch pads for the last week or so, we saw Square, which is the old Afterpay, Zip, and a few of the other payments providers come up really high ranks, which is kind of some things we were talking about off air of the importance of that group working together.
I think because they're all sort of beaten up pretty hard and they're all sort of on their knees. So, and they're all coming off low numbers too. So you sort of get a bit of a pop. You can get a bit of a, you'll get a decent reading because they're so low in the range here. So still got to be careful with this sector, I think, but there's definitely a bit of life in there. I saw Hum was on the list, and that's probably, to be honest, this is the only stock that I would probably trade in there in terms of fundamentals. I think most of the rest of them are probably don't have really good fundamentals, whereas sort of Hum does. That's had a nice little move as well. So SQ2 was number 2 on the list, which is Square, which I did sort of see this actually sort of tighten up there last week. So I think I had a bit of a, just sort of starting to build in here. I think it's sort of a, few high lows sort of building in here. So I might have had a 0, 1, 2, 3 in there, or maybe even a fourth high low. So I thought, okay, a bit like the NASDAQ there, it's sort of struggling, but it is sort of grinding higher, which is a bit of the growth stock. So the only reason I didn't take it was I just sort of thought that sector is underperforming at the moment. So I'm going into an underperforming sector. That's not really
where you want to be.
Yeah, not sort of smart trading. Same with sort of SiteMinder as well. I liked this one here last week as well. So I had a false break here on this. So I do like this business now. I just the only reason I didn't take this trade again, similar sort of thesis there, was that a lot of the sort of tech stocks are sort of not performing well. But this would have been a good trade here because we really could have got. I think we could have got set here. What opened at 289. We're already gone to 350 there already. So but yeah, that was pretty interesting there. Just a little false break there on the low, which is sort of quite common at the moment.
Just on that one before you change it, that strong candle, it's one candle, but there's huge volume on that rally. It's breaking a swing high. It definitely has closed off its high for the range yesterday. How do you read that big volume candle there?
Yeah, no, it's positive. It's positive there. So that's obviously, you're right. So breaking above that high is a good sign. Bit of a big move there. Might be a little bit of an exhaustion signal short term. So maybe you get a pop here and then you get maybe a consolidation. So you might get a little bit of a, you pop like this, maybe you consolidate a bit and then you can go. Probably want to be sort of shorter in length than that, but you probably get a little bit of a consolidation back into 320 or something there and then maybe you come up there. But that's range. Good volume. You're right. Good volume. Bit of change in character potentially. Breaking above a swing high is good sign. Some good volume in there as well. So yeah, so hopefully that is a positive sign. I just didn't take the trade there just because it's sort of the sector's been disappointing there. So
the wrong end of town.
Yeah. So I just sort of wanted to be in a different section there. Actually, sort of, we were just talking before this how one adjustment I've made actually in the last week here is I've noticed like a lot of stocks are actually flashing back and forth here. So if you look at that low here, sort of, made a higher low, then come back and then flashing back here. This type of thing is happening quite a lot in the market at the moment. To the point. So normally, if I'm sort of got if I've sort of got a trade in place there, I like to sort of I normally sort of have my stop, at the last swing low, or maybe just, a cent below it. And I don't like to see a swing low get broken. I like to sort of see it build and go on there. But I'm noticing this environment here, a lot of stocks are just coming back like maybe half a cent or a cent, flicking back below the higher low and then going. And so it's a bit choppier than normal. So I noticed sort of early in the week, I got sort of stopped out on one position there just because I think it break even there on my higher low, and it got stopped out. I only went like a cent lower, and then it reversed. And then I was looking at a few other charts as well. And I thought, this is actually happening even on the half-hourly charts, and just it's happening quite a bit. It's quite getting those springs, and as you talk about, and markets whipping back and forth. So as a result of sort of noticing that little change, little dynamic in the market, I just adjusted my stops on most of my positions just slightly. So instead of being sort of half a cent or a cent below, I gave myself 3 or 4 cents below. And I just adjusted everything just by a few cents. And it's funny, 2 of my positions came back and they both went like 1 cent below the last low, and then popped again. And I was actually good. I mean, I got stopped out on a position or 2, but then I adjusted because of conditions, and then it saved me. But rather than just being too hardcore in my process, because I do have a pretty decent process and some pretty firm rules, but you also got to adjust to the settings of the market as well. If you're noticing something's happening in the setting, it's sort of like sometimes those VCPs can be setting up in a really bullish market. They just keep working over and over again. That's you just got to roll with those. And then if you get into a choppy market, you might be getting these false breaks all the time. So then you got to roll with those because they're the ones that are working the most. So you've sort of got to, I know we've got to have a rules and some process there, but you still have to be able to tweak it a little bit just to recognize the market environment and make a slight adjustment there. And so I was quite happy with myself this week that I recognized that early, even though I got stopped out on 1 or 2 positions, made that adjustment, and it's ended up working really nicely because sort of just a few things sort of flash back and then they sweep back there. I know sort of Computershare was sort of one similar, had the big pop out of the range like we were talking about. I think I did sort of scale out of some of it, pop back in again. I've sort of topped up again. And sometimes these pullbacks can come back a bit further than you like. I probably would have liked to have seen this sort of come back here. So you get you a little nervous seeing them down here. But this sort of 2 or 3 day throwback is really common. So just recognize that is common. That's sort of what the market's going to try and shake you out. Then we've popped again, So you just sort of have to, because I was sort of tightened up here, and then I started to see the market sort of moving around. I thought, no, I need to give myself a bit more room again. So then I've moved my stop back a little bit, and now we've jumped up again. So now I'll probably use that as my, I'll probably use that low, a few cents below that as my stop. I might give myself maybe 4 or 5 cents just in case we get this sort of marginal 1 or 2 cent low again. But just have to adjust to the market. That's the sort of key thing there. So it's a couple of things I sort of wrote down this week was adjust the stops not too tight, scale in, scale out. So I wasn't doing it last week. I wasn't doing enough of sort of, like Mark Minervini would sort of scale in a position, build it up, get a decent move, and then he might lighten off a quarter or a 30 position into some real strength. I wasn't doing enough of that previously, so I've corrected that this week. Just gave myself a bit more room on the stops as well, just because it is pretty bit more volatile, and don't bump myself up to break even too fast. One thing I've sort of done here recently is sort of got a position, got to move myself to break even, and it's been flashing back by a few cents, knocking me out. So just don't be in a rush to get to break even too quickly. So those are the little things that I've adjusted this week, and they've just because of the market's changed a little bit, and they've definitely been working for me. So just thought I'd share those. So the P&I was sort of one on the list as well. Some good volume actually off this sort of low here. So pretty good accumulation taking place down here. A bit of a pop. So it doesn't look too bad. It's obviously just a sort of fund manager, but quite a good one. That looks pretty interesting. I think we covered SiteMinder, the false break. and DMP, Domino's along. So those sort of fives, Chris, like they're on my list. All those five, they all look pretty good. So this has had a nice recovery after that little pullback. I was actually sort of long some of these, and then got up here. Actually, I did adjust my sort of stop a little bit, and then it's come back again, and then congestion. So this is quite good here, actually. We want to see this could be a little cup and handle in here. We want to sort of see something nice and tight here. So maybe congest back to 60, stays tight in the range, and then pops through. Next time she pops through, she might go. Maybe it can go all the way back to 75 potentially. But I like what I'm seeing here so far, like volume the last 2 days. Nice to see a couple more days consolidating here nice and tight.
Just on that one there. So those last 2 days, it's, as you're saying, it's nice to see it just sitting in just under the high, pretty tight. Volume is relatively low for the last quarter. But on that drop down, so that swing high that it's just sitting up next to, so the late October high, touched 65, sort of came back a little bit the next day, and then that was would that be an impulsive drop? How does that read into the character?
Seeing? It's actually one of the reasons I actually because I sort of had a small position of this one, and luckily I didn't get the chance to build it there. I was just because I was probably worried about the sector, because obviously the growth wasn't sort of humming. So, but Minervini would have been selling some into strength, which I didn't do, and then pulled back, and I just left my stop where I originally had it, because I thought, it's come back here. I've got a pretty good entry on it, so I just thought, no, I'll live by my stop here. I still sort of like the trade here. I still think good basis for sort of being long Domino's. I think the $5 pizza could do quite well. I think the good management there, so it could hold up here. Just that growth is just sort of struggling a bit, but it's been a better recovery than I thought here, actually. But so now I'll probably move my stop up to this sort of swing low, and that'll be pretty comfortable. So got a pretty good entry. So I not too much to risk there. And I'll probably just give it a bit of breathing room there. But that's the thing, is sort of
15 days up or something, and
we had a nice move there. That was a good little percentage mover. Now I think our trigger might have been this day here or something there. So just breaking above that level there. So I got a reasonable sort of entry on it. But when we should have been maybe selling some into there. It's the way it goes sometimes. Sometimes you're trading right. Other times you've got too many trades on and you don't manage it properly and things like that. But just try and make some notes on your trading every week. Things just sort of to work on, and even sometimes your best traders can you can get away from your core. So I find writing things down manually is good for the brain and just sinks in, and it just sort of helps there. So so this week I've adjusted a few of get back to some of the things I was doing previously, and then that's helped a lot here this week. So but that looks pretty good. We just want to see this consolidate a bit more. Maybe have a little tighter handle here, and then maybe 2 or 3 days, a couple more on its side here, and then pop up here and see some volume come in there. Then hopefully away we can go.
Nice. And is that are there any more on the weekly launch pad? Or?
So there's a few in there. So there's a few DVP. It's had I think this one might have covered previously there. It's not too, there's some good little volume there. Sort of the only thing, there's no sort of obvious sort of patterns in there, apart from maybe a sort of consolidation and maybe breaking above that swing high there. But you do have some decent volume in there, which is sort of encouraging. AHN, a little small pop in here, probably too small for me. We covered FDV, sort of one stock I know some fund managers do like here, but starting to build a little bit here, but it's probably in the wrong sector, so the growth, So the pendle was interesting there. I thought I did actually sort of notice this when it come down to that sort of that low here on the left-hand side here. I thought that was a bit of a level. I was almost tempted to look at this, but I thought, no, I'm just buying it because my head tells me it's a good trade rather than the charts telling me here. But a bit of common sense as well in there. But there's still a bit going on with that with Regal and Perpetual sort of, so I just didn't get the original side there. But I'd say Perpetual's gone higher than I thought it would, and so was Regal. I think some sort of common sense might prevail in the end there. I thought Iluka was probably one that was pretty interesting on the list this week, just because of the volume. So pretty big volume down here going through here, and this is sort of like you can sort of see this is a nice channel here, and we just sort of popped out of that channel here. So this is so maybe you come back and consolidate back on top of that channel there. Might be something in there. But yeah, pretty big move on pretty big volume there. So that's a pretty good sign there for Iluka. Just want to see maybe some sort of consolidation there. NVX was on the list there. There's
It was a favorite day trading share a year or two ago.
Yeah. So I like this here. It's actually had a nice move here, big volume, then consolidation. Now, I did look at this and I thought, well, it just looks a little young, So this was this sort of took a long time here. Sometimes you sort of need a little bit of geometry in the markets there. Sometimes you sort of want to, has to sort of pull back and consolidate a reasonable amount of time there. So, years of sort of maybe looking at charts visually, just sort of, But this is encouraging here, sort of impulsive here. Even the pop here in 2 days, nice volume again. And then we're pulling back here 3 days, negative there. So this might just sort of grind back in here, but I think there's some reasonable signs in here. So, definitely one that I've got on my list and I'm watching pretty closely there. Just sort of thought maybe it needs a bit more time. MVF was on the list. It's had a bit of a pop there, but a bit hard to trade there. Little tiny 3-way pullback. I wouldn't say it's the best VCP or anything like that, but that's okay. I think Split It was on the list as well. SPT is another one from that sort of sector. Again, pretty small company coming off a low base, pretty choppy there. Nothing, no real good signal to look at there. A11 Atlantic Lithium was that's the one I thought was pretty interesting. It's had a big pop here and now consolidating there. So just to keep an eye on that one. I think WiseTech was on the list as well, but I didn't like that one there. I just don't like to sort of see this is like a strong trend here, and then this is like overbalanced. That's quite a large correction of the move. So to me, this has gone down, and then what have we done since then? Go sideways. So sometimes when you go through a sideways move, we usually sort of come out of a sideways move, probably 8 times out of 10 in the same direction that we came into that sideways move. So we came down into that sideways move. So 8 times out of 10, we come down out of that sideways move. So it doesn't always work that way, but that's just an observation I've made over the years. But so that's probably one that I wouldn't rush in there. Just the odds are stacked against it, even on positive market. But yeah, there's a bit going on there. I'll say gold's still pretty interesting. There's big volume there, some really strength in there. Some of the lithium players are interesting. I would keep away from some of the mature ones that have already run quite big. They're starting to sort of have the big moves. So starting to see this volatility. So when I see the volatility here, that worries me a little bit. That's sort of more like topping sort of process there and breaking. One thing we've seen here, Chris, is we're breaking the 50-day moving average as well.
I saw someone tweet that during the week.
Yes. Yeah. Well, look, every time we break the 50, broke here the 50, went a lot lower, broke below the 50 again, gone lower, broke above the 50, gone lower. So, as I say, it's sort of,
nothing good.
Nothing good happens under the 50-day moving average. And I've learned that the hard way. Everything good, if you look at this sort of positivity as well, I mean, look, that started to break above the 50 here, and look at that move there. So it doesn't always sort of work on the plus side there, but when you sort of see a bit of a base building here, we can sort of see a pop and a consolidation there. See how that's consolidated nice and tight there, and then you've got your little VCP, and then pop out there. That's what you want to see. So if we see that tightening price action there, all happening under the 50, and then we break above the 50, and we see a bit of volume come in, well, that's what we're looking for. So these other moves here, there was no sort of consolidation under there, no congestion. They just went straight above, and then through there. But this is what you want to see. This is the sort of pattern to watch for here. But this is a little negative here, breaking the 50. Got a bit of volume down there too, which is a bit of a concern. So, but yeah, I think some of the newer lithium names are probably still interesting. Probably just be careful with some of the mature names that have already had big moves already.
Very nice. Well, there's some good insights for the weekly. And this point of the video, we're going to do the unfair thing and throw a chart to you and ask you what you think of it.
Okay.
So we had a viewer question asking about BlueScope Steel. Nice blue chip, so we know we're going to get some volume in there. We're not going to be concerned about being too patchy in the depth. But BlueScope Steel, questions wondering whether there's a VCP. So I'm looking at the lows on the chart around the 15. Not quite a false break in the September. And the question's really the VCP. It's looking kind of wild and choppy October, November, and where the volume dry up, I'm not sure. What are your thoughts, Gary?
I actually did like this one. So this actually made my list on the weekend of sort of short stocks, because I was looking. I scan the 300 every weekend, every Sunday, and although we didn't see a new low, we saw a high low here. We have sort of seen a sort of pullback here. We've sort of seen a bit of a rally, and pullback hasn't taken the low out, and then we have sort of rallied again and consolidated. So this is our sort of correction here, bit of a rally, tighten up here. So we got sort of gone 1, 2, 3 weeks on its side there, and then popped out. And look, the week that we popped out, is the week of big volume there. So that's the so that's how the volume has come in there. So I did like this, but I just sort of thought, this might just be a little A, B, C, maybe up to this level here, up to 18.20. So positive for me, but not the most bullish trade there, but definitely a little VCP in there. But yeah, so look, sometimes I can go more. The volume was the thing that actually caught my eye. That was actually after a little 3 or 4 week consolidation, and the volume was pretty good for the weekly. So the weekly looks probably better than the daily chart. Daily looks a little messy. But yeah, this sort of consolidation here is interesting. Definitely seeing some volume come in there as well. So yeah, it's sort of popping up on the volume as well. So some of the bigger days here on the bigger volume. So yeah, and then we're down, putting back here on some lighter volumes as well. So some of these sort of down days in here on lighter volumes as well. So even these down here, down days and lighter volumes. So that's why sort of volume is pretty, just pretty important. Just another piece of advice, actually, Chris, as well, just maybe sort of think here. I've been talking to a few clients, people have inquired recently, and the one thing I sort of, having talked to a few different of the viewers and traders there, is that I just get this feeling that everyone overcomplicates this process there, looking at, indicators and, all sorts of sort of stuff, and then trying to find something which fits the best. I mean, I sort of think, just got to simplify the process there. So as traders here, we overcomplicate everything. I personally think I've stripped my trading back. I'm really just looking at price and volume and understanding, looking in volume in detail. Obviously, sort of what, that's sort of like, I guess, Wyckoff theory is pretty interesting there. I think Anna Cooling's got a good book on volume analysis as well. Those things are really, I think that's as much analysis as you need to do. I'd get rid of most of the indicators. I'd probably just look at the 50-day moving average. Is probably the only other indicator I might look at. I've got the 10 and 20 on here just so I can sort of see how strong momentum is, where the stocks are sort of staying above those, those sort of, if they're quite bullish, so whether, something sort of takes off, and once they start breaking there, I just don't usually want to sort of see a 10 or a 20, sort of broken there. So it's okay to come back and cool off, but you don't want to sort of see them, you want to sort of see them see how they just sort of ride the, they can flick below the 10, but they sort of might ride the 10 all the way up. The 20 probably gives you a little bit more room. But really price, volume, maybe one moving average, that's as complicated as it needs to get. Just get your playbook there. Don't look for too many different trade setups. Just look for, really narrow it down. Just become a master of a few different patterns. Simplify process, just a lot of traders I spoke to this week, and I think, I think you're guilty of this a little bit too, Chris, is that you're, because you're pretty intelligent, you're looking at a lot of things as well. And your 30 to 30 list is amazing. The data you come up with here, or your stocks, is fantastic. And I've seen the backdrop of how much data is going on in the background. It's just phenomenal what you've built. But we just got to simplify.
Too many layers.
Yeah, there's so many layers there, and you're trying to do everything for everything. Just simplify it down, find a few, find the strongest sectors, strongest stocks for the weekly, strongest for the weekly. So strongest quarterly, strongest weekly, maybe your strongest sectors. That's it. Just do that. And then same with our traders. Don't go and trade 10 or 20 patterns. Just narrow it down to a few patterns, maybe a couple of patterns or a couple of setups. Get rid of half your indicators. Just narrow it down. Only have a few indicators. Just simple the process. The best traders, if you listen to them, if you listen to Chat with Traders, you listen to all Trader Line, the best traders in the world, they've simplified the process. Their playbook is small. What they're looking at, the setup, the charts and stuff, there's only a few things they're looking at. They do not look at 100 things, and they do not change things. They look at the same things, the process, over and over again. So just say to all our viewers out there, just simplify it back. Okay, I'm guilty. I've spent 18 years overcomplicating the process. Look at studying every theory under the sun. I've studied sunspot activity and how that affects shares and stuff there. I mean, geez.
Getting out there.
Just narrow the process. Just narrow the playbook. I mean, I know S&B Capital have the he's booked the playbook there. That's for they're more for for day traders, but same principle there. They teach their traders just to sort of maybe have 2 or 3 good sort of setups, and then just trade those and master those and become. And the best day traders in the world, they keep it simple as well. So there's something to be said there. Don't spend 18 years like me trying to work it out. Try and get it done in less than half of that, or maybe a quarter of that. But simplify the process. Shorten your playbook, shorten your charts, get less activity on there, and price, volume, maybe moving average, maybe one indicator total. That's it. Don't overcomplicate it. The best traders in the world I've seen have got a really simple process, really simple setup, and maybe any trader, maybe 2 or 3 sort of trade setups maximum. So that's the best advice I can give you.
Well, that is very, very good advice, and I think all the listeners and myself will be taking that on board for sure. And there's some good insights to wrap on. Good contribution for the BlueScope chart. So we've got to say thanks to the listeners and viewers for putting forward the questions and asking for that. And as Gary said, that was one on his list from the weekend anyway. So good chart. And there's also on the right-hand side some insights like Gary's just shared there. We've pulled some of those snippets out and put them into some other trading strategies and insights like Springs and VCPs. That's on the right. Gary's talking about going through the top 300 that he does every weekend. That's what goes into his weekly report that we cover on a Tuesday. That playlist is on the right-hand side as well. On the left are the Twitter handles. And to that point, we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.